Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for February 26th, 2024. We are recording this at 1 p.m. Eastern Time, and this is episode number 419. My name is David Kosmeter. I'm the creator of TimingResearch.com, and today we have Michael Filighera, and you should be seeing his screen right now. And the option professor is back to moderate, so I'm going to turn it over to him.
Okay, thanks, David, and thanks for being here, everybody. I think we're going to have an outstanding show because we have our guest here specializes in many things, but he is very knowledgeable on the Elliott wave and the Fibonacci numbers. So I'm very much interested in hearing what he's got to say on these markets. And we are finishing up the month of February by the end of the week with the PCE report. And so we could be looking at either a continuation in March and April where it just never stops, or we could have the winds of change blow a little bit. And so we're going to see if, in fact, what's the possibilities and probabilities of that. And so if you've showed up today, or if you know somebody who can watch it on YouTube later, I think what they're going to hear is going to be very, very informative and possibly very, very important in the months of March and April, which are dead ahead. Before we get started, Michael, could you please just introduce yourself and your experience at this and what you're doing at the company?
Sure. Good afternoon, good evening, everyone. My name is Michael Filighera, and I am the chief cook and bottle washer, as they say, at logicalsignals.com and tradershelpingtraders.com. And I'm going to add a new one, which is I have shifted along with I've picked up a colleague, and I have shifted everything over to Discord. So the first thing to be over there right now is my trade room. So it's now on Discord, and any information you might need about that, you can go to www.logicalsignals-trading.com. And a little bit about my background. I was first an options market maker here on the Pacific Coast in San Francisco. I've also traded options on the London Traded Options Market and the European Options Exchange, which was in Amsterdam. And then I came back to the United States because I lived in Europe, came back to the US, continued to trade options. The floor got real slow. And so pretty much after the dot-com crash, everything kind of left the floor, including me. And I then set up my own stuff in my home. But it took me another probably 10 or 12 years before I decided, options is one thing. I think I'm going to go learn to be a day trader, which I did do in 2013. And that's pretty much what I've been doing since. And again, what I do have is a daily trade room. I also produce a weekly podcast, which is a big picture technical update. And minimally, it includes the S&P and the NASDAQ. But then often I'm also talking about the treasuries, gold and silver, and the dollar. And I have a daily, what I call the daily Elliott wave update, and that is basically on the S&P 500 and the NASDAQ 100, but the futures markets.
Sure. And you go over the risk management and all that kind of stuff with the people that do the day trading too, right?
Yes.
Yeah. Because one of the beauties of the day trading is you don't have the overnight risk, and sometimes that can be very, very dramatic.
Yes, it can be very, very dramatic. Yes.
So it's nice. And then now you have all the different amounts of leverage you want to take, from the micro to the mini, and
absolutely.
So and that stuff is going on in most all the markets. I mean, I think they have 10-ounce contracts in gold, don't they?
They actually do. You're right. They have a mini gold, mini silver, a mini Dow, a mini Russell.
Yeah.
No, do they have Russell? I think they have in everything basically.
Because the leverage obviously is a knife that has two sides to it, and so if you have a relatively smaller account, using the smaller contracts from a standpoint of leverage makes a lot more sense. Of course,
leverage and also risk.
Yeah, Norm made a good comment. He goes, Jim, that's a very good comment, except if they're right, then they calculate how much they would have made on the big contract,
Yeah, there is that, and they do, that can happen.
Yeah.
But I constantly, I think as people are learning, say that they haven't really stepped into trade, the S&P 500 future or the NASDAQ future. These are instruments that, they'll tell you this is what it is per tick. For example, in the NASDAQ, it's $5 per tick, but the NASDAQ does not move in ticks. It moves in dollars.
Mm-hmm.
So suddenly it'll be trading at, say, for example, 18,025, where it is now. And then before I can finish my sentence, it just traded 18,021. That's $4. So that's an $80 move in seconds.
Yeah, no, that NASDAQ definitely has the leverage, and it definitely swings. All right, well, let's dive into this thing, because we broke above 5,100 on the S&P, and now we're a bit underneath it. So let's find out what you can say about not only the wave count, but also projections on where we might be going on the upside.
Well, I'm going to start with the daily chart.
Yep.
And basically for the S&P, my larger count, so my longer term, my larger count has not changed since I set it up in January of 2022. So I actually can go out one more so that we can see that high. Which was a longer standing, or at least for the last year and a half, it was the all-time high. And in the future, it was 4,808. And that's where I mark the completion point for a cycle degree third wave, which keeps us in a cycle degree fourth wave. But as the markets would have it, what is really unfolding, in my opinion, remains a cycle fourth wave, but within it, it's going to consist of three waves of primary degree, which will be labeled primary A, which is all the way down here, and we're finishing primary wave B. And again, as the markets would have it, primary wave B is going and moving to new all-time highs, not just once, but several times. And as Jim just mentioned, again, last Friday, and for a very small period this morning. They are not moving to new highs, but it's moving itself back above 5,100. So that, and under an Elliott basis, is considered an irregular B wave. And they're not as uncommon as people would think. What makes this one very distinguishable is that it's happening on a very large degree, and it is really evident that the market is moving to a new all-time high. Not equaling it, not even just by a few cents. It's moving it by now well over 200 points. Well over 300 points, to be honest with you.
Right.
So it doesn't necessarily change the outcome of what I believe is going to happen. Now, as it would be, I always work with what I would call my alternate count. And the alternate count is a little bit different in that the possibility that we may have already finished cycle wave 4, and that would be here, and this puts us into cycle 5. That's a possibility. I don't give it a high probability simply because of this move right here. But I can't discount it and throw it out the window. So sticking with my preferred count, we're within that primary B wave, and within it, it's going to have three waves of intermediate degree labeled A, B, and we're in that C wave. Now I'll come down to that daily chart.
And isn't a C wave generally a fairly strong one, isn't it?
Yes, it is. It doesn't matter on the direction.
Right.
It is normally going to be a very strong, what we would consider impulsive move. And why we call it impulsive is because it unfolds in 5 waves. Now, because that it is a intermediate degree, that's fairly of some decent size. So, but what we be within it are 5 waves of minor degree, of which we've already done 1, 2, 3, and 4. So off of the October 2023 lows, so of significance, October 2022, we saw the primary A wave bottom. Now, you can go back and if you were trading back then and you start to listen to what was the narrative at the time. Market's very, very oversold. The correction is complete. Inflation will start to reverse. Interest rates will start to be cut. And that narrative caught fire and it went. And it continues to catch fire. But what we're seeing in here is the massive participation by retail. And why I say retail is because if we really were to look, not in all of it, but in several parts of it, particularly what we saw on Friday and what we saw in a lot of this wave here, when we go and check it out to who actually is selling, I think we would be very surprised. Now, who's buying, I can tell you, it's BlackRock, it's the larger funds.
ETFs and mutual funds that are getting cash coming
Exactly.
in that must buy.
And that is the retail side of the market, because they don't have enough time to actually go and be discriminatory and say, well, I'll go like this stock, that stock, and this stock. They're like, well, you know what, you got this great ETF and it covers everybody. Boom, here's my money.
Right. And did you I had read or heard that the hedge funds are coming out of this at a very alarming, at a very high rate.
They did until NVIDIA reported, Jim.
Okay.
And then what that was I found so interesting about, they reported last Wednesday.
Uh-huh.
Thursday morning, didn't take very long. Bam, let us all back in. And so we had good volume, and we saw not only NVIDIA go up $100, but we saw AMD go up, I think it was 20. We saw, I can go down the list. You can go to your Mag 7 and just work yourself down the list, that every last one of them pulled up off their low just prior to that, where we saw all of these hedge funds exit. Prior to the earnings, I mean, it was just like down, and well, let's hold on just a second. Let me just put up my hourly chart and let's take a look. Here it is. We basically, they started exiting on the 12th, right? NVIDIA reported on the 21st. Exit, come back in, exit, stronger. And then what was amazing is that where it went just prior to NVIDIA reporting, they drove it all the way down to 49.59, and here is the NVIDIA, and then actually they started to rally it, and here is NVIDIA reporting, and the market reopens. So it was amazing to watch, because they ran it up, then they decided, nope, we're wrong, and they ran it down, and then they just walked in, and that was it. Get out of the way.
This looks a little head and shouldery right now, doesn't it?
You could, put it here, but it's like it just gets out of whack. So I've labeled as a fourth wave. Now, going back to just let's stick with the daily for just a moment.
Yeah, sure.
And then we're in that C wave, and then within that C wave, it'll have 5 waves of minor degree, and we're in minor 5. And in my opinion, what we're now dealing with is an expanding diagonal triangle. Now, under Elliott, you'll find diagonal triangles either at the beginning or at the end. And this one just happens to be at the end. Now, the expanding part of it is not necessarily most common in this current position, but not impossible. And when I go back and I realize, it's like, well, it all counts out very cleanly. And what I mean by that is that waves 1, 3, and 5 will form an ABC. So there'll be all threes. In fact, all the waves will be threes. So we have 1, 2, 3, that's wave 1. 1, 2, 3, that's wave 2. ABC, that's wave 3. ABC, that's wave 4. And here in the S&P, it was a running correction because the C wave failed to take out the low of the A wave. So they keep throwing curveballs at us, but it did come down and touch the trend line. So, and now we're finishing, I believe we may have finished up at this high. We might still got a shot at it. We'll go up and put a slight new high in above what we saw on Friday to complete wave A of minute wave 5.
So your projections on the upside right now, what would they be?
Well, I'm going to go along with that. I've got my trend line and where it intersects on the different levels and how they all are coordinated together. The B for the C wave, it would be this level right here. And that's
5187, 5172.
5187. That's for the B wave, excuse me, the C wave. Now, in turn, would that then complete the primary B wave, which is right here, 52.21. Now, I'm saying what becomes important up at this level is the structure itself. So I'm going to go down to here, to these two, the minor and the minute, but more so the minute, because I'm in wave A of 5, I got a B of 5, and then I got a C of 5. Now we'll see how long it takes, but as we move out in time, I just go up. Now I get minor wave 5 has 1.618, which is the second most common, and that's at 51.74, 75. So we suddenly just have a cluster. We have a cluster of resistance right here at 51.75 to 52.20. All right. Now I've just raised the odds. I got a good probability now, not massive, but I have a good probability because I have 3 major levels that'll meet right there. Now, here's the interesting part. On the minute degree, it's 618 is also right here. Let's see if I can just separate that.
Yeah.
Right, because minute 5 is you see it's coming in together. Minor and minute are at the same level. Now I just upped my probability a little bit higher because I got a match. I have an overlap, but this one is a dead-on match. And
that's more like that 51.87 area, or a little lower, or 51.75?
It's right around 51.75.
I got you.
Now we could get throw over, it takes us to 87. We can get throw over, it takes us to 221. Or we could not quite reach it and get to 51.70. That's still, it's going to be structure. But if we kind of come across here, right, this is where we are right now, but let's go out a little bit. Let's say we go out to here and we're starting from down here and we get our C wave up to complete the whole picture. It builds, it builds, it's built. It's going to meet some resistance here. But now I'm looking at the trend line. Suddenly 52.21 picks up some ground here. Now, full on, we go sideways for a little while and then start to build. We're going to go through this and likely end up here, right? Because I can just follow my trend line. And then I got 2.618 above, and that's 53.07. Now, you'll hear me remark, and if you listen to my updates, I'll talk about what I consider a black hole. This is all uncharted territory up here. So we don't have any past levels that we can hang our hat on to, well, we should find resistance and or support at those levels. We do now to the downside. We've got a trend line and we've got some lows that we can hang our hat on. That should the market break, could be over, et cetera, that type of a discussion. But on the upside, we really are reliant on the Fibonacci relationships between the waves on an Elliott wave basis. There are other Fibonacci levels that are being used, and they are significant. I don't apply them to my work, but that doesn't mean that they're not valid, because many times they come in between. And so when I'm working it, I'm like, well, I got these, and you can come in between as long as I'm working on the structure. It's the structure that's going to rule the day onto where I would be able to consider. And it's what would come after, right? I'm counting 3s on the way up to finish a diagonal triangle. When the downside begins, it's going to be fast, it's going to be clean, and it's going to come down in 5, not 3, not an ABC. So in other words, and I should rephrase what I'm saying, it is an ABC, but waves A and C are 5 waves internally. But what I would be looking for when this is all done, at least on my hourly chart, is a clean 5, not like this, just a clean 5, and it's going to be 1, 2, 3, 4, 5, and it's just going to nosedive. Because the other part of our conversation, Jim, which I'll hold off until you're ready to begin, is we have no real clues as to what the catalyst is going to be.
No.
Set this apple.
And frankly, on October 30 or whatever, we didn't know that he was going to come out and say, listen, you guys are on a ledge here at 4,200 on the S&P. So here's what I'm going to say, Powell says. We are going to have cuts in 2024. Well,
Yeah.
everybody that talk about the shot heard around the world. I mean,
Yeah, really.
that caused this entire thing. And
That
then of
was a
course
shot across the
the
bow.
earnings kicked in, you know,
Yeah.
but
Yeah.
there's so many variables out there, you know, like Nvidia is
Yeah.
doing great, but half of their business comes out of 4 companies. And then these
Yeah.
companies are putting in big money into this stuff, but they haven't actually monetized anything yet.
Right.
You know, so
Now,
there's there,
now
you
again,
know,
I just want to make reference because we started the conversation about who's buying, who's selling.
yeah,
Through much of this final wave up, and you can go back, and this is open source information, folks. Every CEO, every officer of a company, and every larger firm that's got, you know, a fund that they're doing, they have to report their sales,
right.
particularly if it's going to be they're selling Nvidia, they're selling Microsoft, they're selling the largest shares. So as much as I want to say that I've never seen a cheerleader as quite as good as the CEO of Nvidia,
Oh yeah.
I really want to go pull their latest SEC Form 8, you know, I think they're the 8, which would discloses insider sales.
Right.
You know, when you're looking at it, they're basically just, you know, one person that I talked to, they just name all the CEOs, you know, Jamie Dimon and whoever's in head of Goldman Sachs.
Or Bezos, yeah.
Right. That they're Bezos has actually had to state that he is selling X amount of millions of dollars worth of his stock.
Right.
Just like McKenzie has to, his ex-wife has to state how much she is intending to sell. But the thing is like she's smart. She sells and the buyers are standing right there to pick it up from her.
Yeah.
So, you know,
Which,
I don't know. But in any case, I think that what we're seeing is it is the large, it's the ETFs, it's the hedge funds, it's the asset managers that are stepping in and buying because that's where the money still is. So if you've got all the CEOs and the bigger players selling to the retail coming in now, is there a message there?
well, we'll know by March and April, that's for sure. With
That's
regards
true.
to the downside, is there anything on your work that would give you a level that if it started to crack that level, there could be some acceleration to the downside?
I'm going to say 4,700 for starters. It's a level that's held this whole rally.
Right.
So if they come down and break that, then in terms of my Elliott work, they're breaking the low of wave 4, which begins to tell me that wave 5 is done. And if that's done, then I got to walk it all the way up the ladder.
Right.
Let me walk back.
And the 49.59 would be maybe a yellow flag.
Yeah, it would be because let me go back down to that daily chart. The 49.59, even go back down on one more. Let me go to my 4-hour chart. The 49.59 represents where the low of minute wave 4, one we just had.
Right.
But you have that one, but then I would keep this one in mind as well, because I know the market will.
49.35?
49, 35, 36, yeah.
Yeah. That's
so when it starts to break there, it's going to be pretty conclusive that this is done.
Yeah.
And when they start breaking the 4 of the previous, right, it's like, okay, well then is the 5 still in progress? No, because the correction, if it starts breaking wave 4, this is done. Then, to be honest with you, we'd have to consider that as the high. If it did it from here, you'd have to consider 51, what was that number? 51.23 as the high that completed it. But I do not believe that this wave is done.
Now, the thing is on the RSI, are you picking up a slight divergence here recently?
Oh, Jim, the divergence been going on. Thank you for asking, but the divergence been going on for a while.
Yeah.
Look at this.
But even recently, when we had that, when we have the one candle there with the big wick at the top there.
There's the RSI high.
Yeah.
There's the big wick at the top.
Yeah.
It was a lower high on the RSI and the wick before it. A lower high.
And now the RSI definitely looks like it's pointing down, right?
It definitely does.
So,
exactly.
And then we talked about yeah. So where would the neckline be on that little head and shoulder we were looking at on the other time frame? There was a time frame, I think.
Oh, way up in here. Oh, it would be 51.12, 51 on 4. Let me go.
No, I'm talking about on the underneath the neckline.
This one?
Yeah, you know, on the where we're looking right now, and it has that head
50,
sticking out.
64, 65.
There you go. Yeah.
And then you could measure, oh, actually it'd be here, Jim. So it's almost like a double,
Right.
because this would be the head, shoulder, shoulder. Here
Yeah.
you have the head and shoulders, but here you have an inverse. And here you have an inverse. We're getting a lot of those, by the way.
Yeah.
And they all measure, like if you were to take this one, oh, it measures way up here. And the NASDAQ, it measures, there's one in the NASDAQ that you can measure it. It comes out above 19,000.
Yeah, and that government shutdown on the first is certainly not being talked about very much.
No, but they're rumbling. They're starting
Yeah.
to rumble on it.
Yeah, did you see where I was talking though? On this chart here, you have that head sticking. Is there one shorter? What about just one shorter time frame? That might be clearer.
Yep. We're going to go to the daily. I mean, to the
Yeah,
hour.
there you go. There you go.
This
Okay,
guy?
so yeah, then you've got the neckline coming in kind of right around that 50
63. Oh, so
50.
you're talking about
I'm
on the
talking about
downside
I'm talking about on the downside, and I'm talking about that formation way on the right, the current one.
right here.
And then basically there's a neck right there underneath, and kind of it's breaking right now as we speak a little bit around. But this 40,
Yeah.
50, 80 might be a place that could see some acceleration as well, maybe on a short-term basis.
Well, on the hourly chart, it just broke it broke the 50 this morning,
Yeah.
but it came up and tried to retest it just
Yeah.
now within this hour.
Yeah.
It tried to test it and is failing. So
Yeah.
that just brings out the sellers, the next round of sellers.
And then I
again,
see the RSI is around 40. So if it can break through 40 on the RSI, then you could accelerate. But if it
you
can't,
could
then
accelerate.
or if they can't, then they're just sucking you in and they'll run it right back up again.
Well, here's the picture. Look what's down underneath it.
A lot of air.
Hole. That's what I call a black hole. And
Yeah.
why? You're going to be hard pressed to find support when it was just the biggest rally we'd seen.
Well, I'll tell you the other thing from an option standpoint, the VIX has a very large gap on it between like 14 and change and 15 and change. And to fill that gap, it would require the market to drop.
Are you talking on the VIX
VIX, yeah.
or the future?
No.
Oh, no, there it is right
The
there.
actual VIX. There you go. You see it?
Yeah, I do.
So if
My
in
moving
fact
averages are in the way, but there it
yeah.
is. See it? Right there.
If
it's
in
huge,
fact
Jim.
if in fact that's going to fill, it would require, it looks to me like if you start seeing 1450 or better, or 1425 or better, it probably might be on its way there.
Well, we
And you get
gapped
that
up.
RSI kind of looking like it's getting stronger, not weaker, huh?
Yeah, actually, but we gapped and then we come back. We've just filled this gap
Yeah, we did.
and now we're heading higher again.
And now you got the green.
This could be really dangerous.
Yeah.
This is
Well, I mean, that's how you get that's how you'll get your break. And, again, there's so many things that come out on the news. That's why it's hard to, predict that kind of stuff.
But underlying all of this, I heard some grumblings from people that I talked to, but also what I've read, that do not be surprised that the Fed doesn't cut, that they actually raise in March.
If this PCI looks anything like CPI or PPI, I don't know how they do anything else.
There you go. Well, who are we?
Maybe not hike, but I mean, forget about this cut thing.
I would say the cut would go out the window, but I do think in terms of if they cannot come to an agreement because they want to be hard-nosed about, well, you got to cut your spending, which is so misplaced because the government is going to raise funds however the government's going to. And if you think a shutdown is going to be giving you the seal of approval to fight for cuts in spending, it ain't going to work.
Yeah, the debt at 35 trillion. A guy in Bloomberg was saying that the last trillion on the debt happened in the fastest time ever, which was 106 days. So in 106 days, they added another trillion to the national debt. So
I don't understand, folks. 106 days is less than 4 months.
Yeah. So
we're
accelerating on the debt thing. And then, like I say, they've got a shutdown facing on the first. So there's a lot of stuff that could change the winds of, but obviously the prices will change.
True. And what they also say is it'll be a partial.
Yeah.
It'll be a partial shutdown. I mean, so there's certain things that will go and certain things that will be stopped. one thing they never talk about is, of course, is, okay, you guys in Congress, since you can't make up your mind, you don't get paid.
Yeah, no, that never happens.
I know.
Well, we're at the
Because I
bottom
think
of the we're at the bottom of the hour here, and I definitely want to go around the horn on some of the
Okay.
other markets. So let's switch over to gold. I think we got a reasonable idea. And my feeling on the S&P is kind of like, if S&P goes up or down, the other ones will follow in some way, shape, or form.
Yeah, they will. But the bottom line on both the S&P, the Dow, the Nasdaq, and also the Russell is that I still think that we have one more leg up.
Okay.
Now, I cannot guarantee anything. I don't think any of us can, but
No.
that's what I'm looking for. So I'm looking for additional highs. And
Yeah.
again, like the levels I just showed you, between 5180, 5175 and 5200, 5200. Yeah, up in there
Yeah. Okay.
is what I'm
So,
looking for.
a little too early to pull the trigger on the negative side, but also keep an
Absolutely.
eye. We could be very well into the fourth quarter here.
We could. You're right. We could.
Yeah.
Without a
no
doubt.
no evidence of a big turn by now. Right now,
Not
it's just
yet. And I think that's a very smart thing to say, because I try to tell people that always say, "Oh, you're always a bear." It's like, no, I'm not.
no.
I have not gotten any longer term signal, even a short term signal,
Right.
that the market has gone bearish. I've
No.
not gotten any signal. So you don't get out of a long yet. If
No.
you're a long term, that's your position, is you're in it for the long haul.
Yeah.
You're not getting any signals to get out yet.
No. All right, let's get hopping here on the gold. It looks to me like it's in a very tight window, and I've been saying above 2060 and under 2020 might tell us where the next move is. The gold stocks are in the toilet like you don't know. So,
well, I'm going to give you a little insight, because I've had a position on in gold. I've had an iron condor on.
Yeah.
And
well,
it's not far out.
No.
It is for March 22nd. So, or March 28th, excuse me. So it's the end of March. But I'm starting to see volatility firm up. And so volatility, by the way, in terms of options, converts to premium. And so we've seen the threat to the downside, and it didn't break. So the bottom side of my puts didn't get challenged, but my thought is that the upside is going to get challenged, and that's where I could get a break. Now I'm looking at this in my weekly. You can just see it's just like triangle again.
Yeah, it's wedging.
And it's wedging. But if I'm looking at it correctly, I don't think it wedges and breaks lower. I think it breaks higher. So I think we might come back down and test this level. This is a weekly chart. That makes it tough. Let me go down to the daily and let's open it up. Right? We're up here. Again, this was that anomaly that I heard was was it Japan, or it might have been Chinese? There was a buyer somewhere that got cashed out. He blew himself out. And that was the cover. And so, because we saw that all they did was sell it all the way back down. But even if I'm counting it, it's like, even if I do it A, B, C, D, E, would show down. But if I'm coming down A, B, C, D, E, it's still going to come down. But I might, A, B, C, D, E, it should explode higher. So I'm looking to take off my iron condor in gold, because I do believe that it's going to be the upside that's going to get super challenged. Right now, for that to happen, now here's the other side of this. You know as well as I that gold is so attached to the dollar/euro. Now, I've got one count where the euro can go to 112. That would make the dollar, make gold go like, thank you very much, just we're gone.
If they ever cut interest rates, I think the gold and the euro fly.
The gold and the euro fly. But the dollar index Can I switch over to that real quick?
Yeah, sure. Well, like I say, gold is pretty much in a wedge. It breaks above 2060. You got something in 2020. And right
You got
now, like I
something.
say, and you're thinking it very possible it may break to the upside. But right now
Right.
it's still in the wedge, so there's not much really to say. What
Now
about the dollar index? Yeah.
here it's a little bit different. I may have to make adjustments to my count and bring the A down to here
Okay.
and the B, and then this is a C, and this is all done. Or the market can actually start to rally. So I'm just thinking in terms of, okay, how high can it get there? But more likely here.
Mm-hmm.
I'm hearing some folks talk with a tone of serious at the 108 level for the dollar.
If they don't cut rates, makes sense, right?
Not only to make sense, but what if they just because they have to, they throw the surprise and they actually raise?
Boy, that would really send a lot of volatility into all the markets. Yeah.
You betcha it would. So I don't think that there's anything because, and just to toss it out there, it's not only that we have things within the markets that could be a catalyst to drive it in either direction. They certainly exist. And you can tell that the market's like, well, we don't know either. Well, it'll go up, it'll go down, it goes up, it goes down, but it's just kind of trading in a range. And that tells you that it's really all going back over into the options. And it could be very much that they're just standing there buying puts and selling calls. We don't know. But when there's a lot of things outside of the markets, outside of the economy, outside of even within our infighting within our government, that could toss this market, all of our markets, into total chaos.
Yeah, I mean,
Because
you just don't know. Those are the unknowns, right? So
right, but they're building again.
right.
They're building again. We do have problems in the Middle East. We do have a problem with Russia seeming to feel like they now have the upper hand and can start threatening. And while I've read and I'm hearing that there's the possibility, or there's something out there that part of that plan might be that they go and they step into one of the what would be perceived the weaker Baltic countries,
Yeah. So you don't know how that'll spread.
Forcing NATO.
Well, let's see about the price of crude oil because, frankly, to my eye, if it gets through 80, it could send these oil shares up going into the spring. And if it can't and it rolls over to the downside, then we're back in the soup again. So what do you see
Look
here?
at this weekly.
Yeah.
Wow. You could draw a line here and another one here. It's like going absolutely nowhere. It's stuck between what is this what is that?
70, 80. Yeah.
Yeah, 60, 63
Yeah.
to 88, 95.
Yeah.
And 95 was a spike. Yeah, and it sits.
But it's getting tighter and tighter around this.
It is getting tighter and tighter.
Yeah, so.
But even if I bring it down off of there, let's take a look at this pattern here. This is not bullish.
Okay.
This to me, it is not a bullish pattern.
Right.
And so it's not a bull flag. It would be a bear. But
if you could break above 80 and going towards 86 or something, that would be
that would be more bullish.
Yeah, yeah.
But right now, if I'm even on an Elliott basis, if I were to say 1, 2, 3, 4, first thing it has to do is break cleanly above 80.
There you go, above 80, right?
Without turning back.
Right. In other words, a breakout that's sustainable.
Yes.
Not a peekaboo.
Not a peekaboo. Absolutely. Yeah. But otherwise, I would consider this an ABC and there's a little bit of an extension going on here.
Well, I'd also heard that we had a huge production of oil, and so that didn't hit me as bullish. It seems to me pretty obvious that if you get above the 80 area, that would open the door for the spring-summer rally. And if you can't and you start taking down to the downside, maybe that rally won't be happening on those oil shares.
No. No.
So again, like a lot of things right on the ledge as we go into March and April, you know?
Yeah, it is on the ledge, but even on my larger time frames, it doesn't, I think it continues to trade in a box.
Right.
You know, you've got down to 60, and that should be pretty well, and it seems to be pretty well supported.
Yeah, maybe it's a 60-80 market, huh?
Yeah, yeah. I
Hey,
mean,
let's look at I don't want to run out of time here. Let's hit the treasury bonds because everyone wants to know what that 10-year notes are going to be doing.
oh, you want to look at the 10. Okay.
Yeah. I have this 435 area on the yield. I don't know what the price will be, but the yield of 435 very important. If we get through 435, I was thinking that the 480 gap would get filled. I think if you look at a different time frame, you might see a gap that I see around 470, 480 on the yield on the 10-year. My chart it showed it. I don't know. Maybe there's not.
It's okay because I would understand what you're talking about.
Yeah.
But let me, this is where you're right. It gets really sketchy.
Yeah.
Because the way I'm looking at this, that's why I was going to start out here, is that I don't think I can go back any further than that. But if I go over to the futures market, I can show you. Here we have the all-time low in the yield and the all-time high in the price of the note. And then we did 5 waves down, right? As interest rates went through, all their gyrations and got raised, blah, blah, blah. Now, I'm considering this an intermediate degree A wave or just an A wave out of a larger primary degree ABC, which will be to the downside. But what we're right now in is the intermediate B wave counter trend rally in bond price, decline in yield. So with that in mind, I'm going to go back over to the 10-year.
Yeah.
Just go back.
And we topped out there at around 5, and we bottomed out around 380, and now we're back at the 430.
So but we're in, and this is A of B, B of B, and we got a C of B to do yet.
Okay.
That is going to bring the yield lower.
Okay.
And then when it's all done, we have a C wave up to higher yields. So again, I said that backwards when I'm talking about what we got going on. So in the bond price, it is a B wave counter trend rally. And when it's finished, we're going to get a C wave that's going to bring the yields up and the bond or the note price down. And we should go below, and I'm not saying it's going to happen this year, next year. I'm out there. So I'm thinking that we got a lot more to go in this whole game to the downside. And so I'm not sure if this is going to be A, B, C, and we're going to put an A wave underneath it. Then we get a B wave, and then we get a C wave, and then put a B somewhere down in here. Because if I can't go out because this particular chart, I don't think they actually had the yield futures. I don't know how far back they go. I don't think they go that far. We probably didn't have them. Oh, yeah, we do. We got October of 2022. So if this is going to be 1, 2, 3, 4, and a 5, then we get an ABC. 2.5 is not out of the realm of reality.
So that's a total reversion to the mean on the longer term graphs. Yeah.
Right. But you look at it,
and that would obviously probably happen to come with some rather negative financial news, right?
Right. Well, yeah. But look, we're out in 25, 26.
Yeah.
I mean, yeah. So that's what I'm looking at.
Yeah.
But for when yields will start rapidly going higher again, I think it is out here.
I got you.
I don't think that it's going to happen. I think now we're in a little rest area, a little area of I would see that the Fed does have room to actually cut rates some, but it has to really go along with what I think actually what it'll go along with, which will confuse the market, is that if we go into a recession, which everybody just poo-poos on us, is not going to happen. And I'm like, okay, so why? Well, because Nvidia is still, showing that they're making bazillions of dollars, et cetera, et cetera. It's like, that doesn't mean that we don't start devaluating. Now, that's my thought. I think you're missing the signals. Because what happens after periods of inflation? Everything goes back, just like you said, goes back to the mean.
Right. Right.
And so where could interest rates go? Back to their mean.
Yeah.
Right. So it makes more sense that if the currency is devalued and the markets start to go through a period of deflation, so they're not being inflated, they're deflating. The prices are deflating. The prices are coming down. Doesn't mean that they're bad companies. It just means everything is just reverting. It's just, which is not a bad thing. People consider that because they see their assets decrease.
Right. Let's I want to go around the horn quickly because we're running out of time on some stocks that if March and April were to be contracting months, may have some vulnerability. Kathy Woods was selling Taiwan Semi, that's TSM. See if there's anything there that might indicate you've reached a crescendo, or maybe it hit a target or anything.
It's very close to its all-time high. And in fact, if we just go, it is actually on the body of the candles, it is hitting new all-time highs. So she would probably think, but in my view, it's doing it in 3. So again, like our markets, it could be an irregular B wave, goes above the high that was established back in 21 to 22, makes another new all-time high, and then rolls over. It's coming up in 3. Look at that, 3. So if this is A and this is B, you got a C wave, which will take out that low. Now that's on a big, big monthly chart.
Yeah, right. How about on a shorter term chart, like a yearly? Yeah, let's look at these on the yearly. So see if there's any relatively shorter term indications of anything.
Here's a 2-year. So there was that October 23 low.
Right. That's when they all went nuts. Yeah.
We all went nuts. Okay, so semis. Here we got the A, here we got the B, and then we got 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5. They might have a new high left in it, but that should be about it.
Yeah. Because the basic idea is March and April may have a reversion to the mean, not a collapsing in the market, but some of these are so far extended from their moving averages.
Absolutely.
Yeah.
Yes, I agree with that. I'm not looking for the world to come apart at the seams.
No.
Could.
No.
But
the moving averages are going to have to be at least come back to, well, it just came back to a moving average when it went from 135 down here to 124 recently.
Right. But I think that approach and what you're saying is so much smoother than saying it's a crash. It's this, it's that. No, it's reverting back to the mean. Yeah. Things have gotten overvalued. So
what about Meta?
Oh my God. Sorry, I don't mean to laugh.
These are all very far from their mean. Do you know what I mean?
Well, I want people to understand one of the CEOs that is selling, he's just not saying it, is Mark Zuckerberg.
Right.
Well, this is my daily. Let's look at this. This is November of 2022 is where this stock bottomed.
Yeah, right.
That was all interest rates and blah, 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 and layoffs and COVID and all that noise. And it's done nothing but just been run up. Yes, they continue to produce revenue through ads, et cetera, but they are, I would say that they're driven. They're driven by having, he is funding his Oculus division through the ad revenue that he's pulling off of Facebook.
And that's a heck of a gap they've got there too, huh?
On the latest earnings, yes, it was pretty amazing.
Yeah.
Pretty amazing.
So we got that up there. What about Microsoft?
I actually love Microsoft. Here's a company that has just been not, I do think, actually, right now, I think Microsoft has one additional new high to make, but it could be 25 for all I know, right? I think it's too difficult to try to pinpoint the exact level. I mean, I could try, but it's so tight. It's so tight in all of this. I mean, even here, it's pretty tight, but it comes down beautifully, coming down in 3. So if it's following what I'm saying and it's happening in the NASDAQ came down, made a 4, and now it's going up and it should do a 5. And if it's doing it in the same manner, then it's also going to be somewhat of a triangle. And we'd be looking from here, but these aren't quite. Then we had the noise around their earnings. They survived and did well, and then ran to a new all-time high. So dropped back down on that NVIDIA.
Another reversion to the mean.
And yeah, there you go.
That's what I'm saying. When these things get way extended from their averages, keeping an eye out for a reversion trade is not the worst thing to keep your eye out for.
No, you're right. And you know what? I hate using the word, but I'm going to use it. It's a simple trade.
Yeah. Yeah.
It's not so complicated. It's just going to revert and going to go back to here. But now look what they're doing. Right? Let's bring it back down. Let's take a look on that hourly chart again. They're not willing to give up. We got the hourly 200, but more importantly, the hourly 50.
Still rising.
They don't want to give it up.
Yeah.
It wouldn't take much, right? This is a 20. It didn't take much. It broke it, and look what it did. It didn't take much to get it to start to turn. The 50, it's the 200 that'll take longer to turn. And now it's flat, so now it's providing support, even though the market is below it. But it hasn't broken yet. And this is
what about Apple? Apple certainly seems to be sitting out some of the dance here.
It is, except Apple still has not really addressed what people are perceiving are its problems. But I still feel pretty strongly on Apple, but they put a lot of hype into their virtual reality visor or headset or whatever, and there's been more returns in there. Yes, there's still been good sales, but not like what they were expecting, and that's what's driving it lower now. But
this is a neighborhood that might be a low point, though. Looking at the RSI, what do you think?
I would agree, but that's the hourly. So let's just go out to the daily, take a peek.
Seems like it's a 180, 200 kind of stock right now, right?
Yes, but I think we got a shot at coming down and getting in.
Yeah, you could give it up because everything's starting to.
As long as they can hold above, as long as they can hold above this 4.
Yeah.
Then I'll take this down. Man, this tells me done. 1, 2, 1, 2. We done. But it's not following through at the speed or the intensity that I would associate with the wave pattern. So this might have to come off, and this is an A, B, and we're just doing a C wave down. We'll get down to here, and we'll do another rise.
Right. But it looks like 184.5 is a pretty good resistance zone if you want to.
Right now, yeah.
Yeah.
And when it can break it, it rushes back up to 188, 190.
Yeah.
It's been
likewise, if it were to break 176, could that open the door to a nice $10 drop?
Yeah.
Maybe that acceleration would maybe come into play if it could break underneath that 175 area.
Here we are here. We got a little bit of a black hole because we got to go back to October of 2023 to find support. See, if it starts to break from here, we don't have anything until we go all the way back to here. So yeah, it could.
Now, what about something that really got nailed? Is there any future for Tesla, TSLA?
Do you know Tesla's almost touching 200 today? Is there any future for it? I don't know.
Well, it's up 20. It's up $20. That's what I'm trying to say. Is maybe it was a buy down here, and obviously it was against 175, huh?
But
what about the future?
This is one that I do.
Mm-hmm.
But I'm just throwing fibs on it because I'm trying to just determine what it's doing. But the move really looks like it's finishing, but it's doubling. It's double topping here, is what I think.
Well, and then you got that low over here that might also serve as resistance now, which is in the same ballpark of a couple $100, right?
Oh,
A
there
little
or
bit lower.
there?
Yeah, well, either the higher one or the lower one there. Yeah, the lower one
Oh,
was at
here we got the
195.
gap. We've got that high from the gap. Yeah,
Oh,
207.
I got you. So they might be trying to fill the gap 207.
They, for whatever the reasons are, right?
Yeah.
Whatever their reasons are. So we got 209 at the top. But this is another one that really has been doing a series of head and shoulders. I've got a one, here's another. I just got head and shoulders all over the place. And I could put this out. Let me see if I get it even clearer up here. Here's a big one. Here's another one. Here's another one. So it has a shot. It definitely has a shot of trying to get itself back to 300. I don't think Miss Woods would be just pleased if it did. You know, she'd look like the hero, but it's got a lot in between in doing it. So I have pegged 200 as resistance, 209. And 220 should be even more difficult because you got the 50. This is the daily. You got the 50 and the 200 between 220 and 230. I think it'd be hard pressed. And if the market gives it up, this is not going to hold itself higher. It has too many problems. There's just too many problems.
You know, one more out of favor is Pfizer, PFE. You see anything going on there?
I'm not sure why, particularly with Lilly. Wow. Particularly with Lilly going through the roof.
Well, they don't have that product. They're probably in the lab right now trying to get it.
That was good. They might be. It definitely might be. Here on the weekly, oh, it is sick puppy, but it could be finishing, Jim. I mean, if we're just looking at it saying, okay, here we are. Let me go up one more. We're down to 70.5, and that you can see where I ran my fibs, that entire rally. So I've just run fibs from 09 to 21. And you were right. This is definitely in trouble. Because a break here,
the abyss.
It's an abyss. Yeah. Amen. It's an abyss. Definitely.
Well, yeah, at least you know where you don't want it anyway.
Well, and I think from here, if I wouldn't be opposed to saying, I think I'm going to pick up some cheap options, right? Yeah. But I'm going to go on what you've told people all along. You can use options. Your risk is less. It's much more manageable. Your exposure is only what you pay.
And the only reason you get it here is you think there is a big snapback ahead, so you could buy a lot of time. I mean, people think they have to buy weekly options. You know, you can buy them for a year or two. And, if you think 27 will turn into 37 or something like that, some of the options around $30 are probably somewhat reasonably priced from the standpoint of a dollar figure.
Right. Or you just put on a vertical. You just put on some type of even a calendar spread.
Yeah.
You know,
yep. And then you buy the long-term one and you sell the shorter-term ones, right?
Yeah.
And ultimately, you're trying to get the thing to pay off on the other one. Yeah.
Exactly.
All right. We are at 10:59 and there is more stocks than there are time in the day. So what I would suggest people do is contact yourself. And so tell them how people can get a hold of you and what you can do for them.
Sure. Again, if you want to just send me an email, send it to Michael at mjf1partners.com. I love questions. I always answer my emails as long as they're valid. Then please ask me anything you'd like. Again, what I do during the day is I operate a trade room. I've expanded it. We're now over on Discord. If you want to go check that out, it is going to be www.logicalsignals-trading.com, and that'll take you there. And there you'll be able to find information on the trade room, who I'm doing it with, but then also I provide coaching. If you had an interest in coaching, it's available. And then we also do individual analysis. So if you had a group of stocks or some stocks that you really want a strong picture on, we do charge, but it is available.
Perfect. Okay. Thank you very much, Michael. And
Thank
again,
you.
yep, you
As
bet.
always, a
And
pleasure.
yeah, we'll do this again. As far as Option Professor is concerned, I'm Jim the Option Professor, and I've got timing indicators I use as well based on momentum and trends. Plus, obviously, I've got a lot of knowledge on the option strategy. So I do educate you on both the timing and the strategy. And do you think I can help you? Obviously, I believe I can. So if you're into trading, timing, and the options, go to optionprofessor.com, put your information in there. I'll talk to you directly, and I think you'll be very happy on what you hear. Okay, David, I'm sending it back to you. Michael, good luck and good trading. And
Thank
again,
you.
let's see how March and April pan out. We'll be talking
Yes.
again. Yeah, we'll definitely be talking again.
Okay.
All right, thanks, guys. Great info today. Great discussion. So just a quick reminder for everyone, be sure to subscribe to Timing Research on YouTube and your favorite podcast app. Also, you can just go to TimingResearch.com to get access to any of the past shows and presentations, including this one, as soon as I can get them posted. Also, you can find Timing Research on Substack now. So I just want to thank my guests again for today, Michael Filighera of logicalsignals.com and logicalsignals-trading.com and tradershelpingtraders.com and the option professor of optionprofessor.com. Thanks, everyone.
Thank you.
Bye, David.